rhetoric anyway from the White House.
Yeah, absolutely. And you have to look at remember the setup. Like we came into this year after two of the strongest years we've ever seen in the S&P 500, back-to-back 20% plus growth years. So there was a lot of risk. Markets were near the end of extremes and valuations, and it was really all going to come down to earnings growth if the market was going to have a good year. And now we've got big questions around earnings with trade wars, potential consumer slowdown, whether there actually is going to be a recession on the horizons. And as we all know, markets hate uncertainty, and I think we're going through a readjust here, but I think it's going to be fine at the end of the day. It's just you got to get through the pain first, and then we'll see what the reset is.
But if we do get a damaging, drawn-out trade war, I mean, that is going to cut into corporate profits, presumably.
Yeah, it absolutely would, and I think the cooler heads will prevail. I really hope that this is really just the talk at the beginning, which President Trump has done in the past, where he tries to bring people to the bargaining table to try and threaten the extreme and then meet in the middle. And you kind of hope that cooler heads will prevail, and this was exactly what he's going to do again. But there's always the risk that it doesn't work to plan this time.
I mean, Howard Lutnick, the Commerce Secretary, I think is being dismissed by some as Trump's attack dog. And there are questions over how in touch he really is with economic policy.
I think it is. And I think we're also starting to hear some comments that there might be a bit of a rift within the White House, that people are saying, well, wait a minute, we will got behind you because you're going to save the American economy, deregulate everything, get growth back, bring industry back. And we're getting the opposite right now with Doge and trade wars and the market falling down. And I think this is, again, just you want to get the bad news out first, and then we all know that Trump does pay attention to the stock market as much as he's been saying lately he doesn't. I'm pretty sure he's watching, and he's going to be paying attention closer to the midterms, and I think this will be something that will resolve itself over time.
You are concerned, though, about the Canadian economy.
Oh, absolutely. The Canadian economy is really at risk here. We all know we've had some problems getting the economy going, not doing the best things around the energy policy, not getting interprovincial trade going. So this might be a nice thing to kind of get the country together, and maybe we will spur on some growth and make some of the changes we should have done in the past. But there's a lot of risk here. We all know that there's problems with housing, and whether there's bubbles, there's not a lot of growth going on in the country. Our productivity's down. So hopefully once we get Ottawa figured out and maybe a new path there, then we can get the country going again and maybe avoid a recession.
But it seems that we've got these ingrained productivity problems, weak business investment for a decade or more.
Oh, absolutely. It's not going to be something you can fix overnight, and it's going to take time. And I just hope that hopefully we're going to get everyone together to do this. And having an outside threat like this trade war might be enough to get people to start to work together and try and meet that goal. And hopefully there's a brighter future.
Yeah, it'd be refreshing maybe to see the politicians stopping just firing broadsides at each other and maybe discuss solutions here.
Working together would be a nice outcome versus trying to create rifts, which is kind of what we've been going through for the last number of years around the world, frankly.
And create clips for social media or whatever
exactly.
they do. Yeah, that's right. The U.S. consumer, of course, famously, America is a tertiary economy. The consumer is vital to growth. Presumably a loss of confidence among U.S. consumers would be damaging.
It is. And I think what we've also had in the U.S. is really a big split between the have and the have-nots. The higher-end consumers, absolutely fine. Interest rates have been going up. That means they're making more money on their savings. They're not really impacted by tariffs because things go up on goods. That's really something that hits the lower-end consumer more than anything else. So I think we're starting to hear that the middle and the low end is starting to have some pain. And that's why we're starting to hear some comments like Walmart made on their last quarterly call that they're starting to see some signs of slowdown. And I think that's going to be a big risk. And if you do get that, that's really going to wake up some people in Washington and say, well, wait, maybe we need to start to spur on some growth and try and keep things going.
Is there an asset class you're overemphasizing right now?
Well, I think the big thing, and that's what's going on in the market, is you're seeing a sector rotation. We all know the last few years has been all about Mag 7 and technology and growth stocks, but we're now starting to see those start to come under question of, do we own too much of this? Did we put too much emphasis on the AI theme? And we're starting to see a rotation, and that's where you're seeing some of the more value, cyclical focus indices do a lot better. You're starting to see the defensive stocks, the pipelines, the telcos actually start to act a little better in the last...
less cyclical ones, sorry.
Absolutely, yeah. So the less cyclical stocks that are more defensive, and that's really coming back. And that's why when you look at the index returns, that Toronto's doing better than the U.S. The S&P is down 5. I think Toronto's roughly flat to maybe down a little bit on the year. And you're starting to see also a big rotation into the international markets. Everyone had been over-focused on the U.S., and they'd really written off Europe and Asia. And in the last few years, we've seen the Japanese market do well. And this year, we're seeing the European markets flying, which has really caught a lot of people flat-footed because most had written them off as places they didn't need to invest in. And people are looking like that could be a good spot to be and less focus on Trump.
Maybe we could just put up a 10-year chart for tech resources. Without commenting directly on the stock, we have seen weakness in copper prices lately. The uranium names are down. But I guess the old saying about the commodity stocks, the cyclicals, is you buy them when the multiples are ridiculously high because the profit has collapsed. Do you think it's time to start thinking about commodity stocks?
100%. I'm a big bull in the commodity stocks, and I think the setup's actually really good for them going long term. And part of it's just because the sector's been so out of favor for the last 5-10 years. There hasn't been a lot of capital allocated towards it. And when capital's not being allocated to these mining companies, whether it's energy or gold or base metals, they're not exploring, they're not building new assets, they're not trying to bring on new supply. But now we're starting to see the economies are actually starting to do okay. We all know the Americans need to put copper back on the supply.
But the trade war could spoil that, couldn't it, Greg? Sorry.
Well, it could spoil it on the margin. I think that's going to be more a consumer impact. But they still, at the end of the day, with this AI theme, we need more electricity. We need more power plants. We need more wires in the ground. That's copper. That's iron ore. That's base metals. And you can't just turn a mine on like that. You can't order them on Amazon. You need to actually start to develop them. And it's starting to take 10 to 15 years from the time of discovery to get into production. And we've kind of had 10 years of nothing going on. So I think the base metal sector is looking okay because, again, there hasn't been a lot of activity going on there, and it could be a nice setup.
Up next, we have more from Greg.